Greetings, this is Dr. Jeffrey Scott. This is my market MRI Pro update for March 13th, 2025. Lower highs, lower lows. Sell-off continues despite soft PPI. We've got a sentiment report coming Friday morning, and I can't imagine that it'd be anything but soft. But even the soft PPI did not seem to turn the market around. Doing this about 8:30, futures are actually much higher. I mean, after hours, there's some big news. There's an acquisition of some small company, RDUS, but at a big premium. AAOI is up 80% plus because Amazon took some warrants to buy shares. Looks like Red Brick is up, SMTC is up, DocuSign, Ulta. Um, so a number of stocks are up, not that many are down. But I think the market's really waiting for sentiment. And again, who's going to say sentiment is good? I'm expecting it to be weak and probably scare the market. So we'll see what happens. Email address marketmripro@gmail.com. This is for educational purposes only. Anything we talk about is in the spirit of education, not investment advice. The intent of my video is to demonstrate the tools that I use for top-down analysis and trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy, sell, long, short any stock mentioned in this report. Trading stocks and options should be considered risky and should always consult with your financial advisor before making trades. And there's people who followed me over the years know that I have tools in multiple platforms. And what we're using now, Market MRI Pro, is a new tool that I just launched. If you're looking for the wealth charts video, there will be one in the morning at 8:30 at stocksanddocs.com, another platform that I use. Orange County meeting is locked down. People are starting to sign up. There's limited seats. It's about $300 and contact Greg Mills at gam72054@aol.com. More information from him. We come in on Wednesday, which is actually coming on Thursday the 5th, and then the meeting at the hotels Friday and Saturday. We check out Sunday morning and we go to one of our hosts' home where he brings the food in and we have a nice time sitting around a screen in his dining room and living room. Typically have 4 to 6 speakers, and I'll announce them probably in the next 2 weeks. For those that are new to me, I have a Google group. It's called Top Down Trader. I use it as my mailing list. I push these videos out. You don't have to go wondering if you're going to find them somewhere. I give discounts to my tools. I do impromptu educational programs, and it's a great place to correspond with me and some of the other folks that are like-minded traders. Just go to Google Groups, look for Top Down Trader. There will never be a charge to be a member. I asked this the other day, and I was talking about the Truflation U.S. Inflation Index and how they were giving the lowest value since 2020. And you could see how they were seeing such a recent drop-off. So far, it's kind of holding true. Are we heading into a recession? I think has got to be the question with rates coming down so much. I still think it's a tariff tantrum and something that could end very quickly with the appropriate commentary from the guy in the White House. But right now, it's something that day to day seems to have all kinds of volatility. Don't forget, as I mentioned earlier, consumer sentiment comes out Friday morning, but not at 8:30, at 10 a.m. And we still got a few earnings, and this evening we had Ulta, DocuSign, and they were up. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So I'm going to do my typical review. And one of the beautiful things about this new program I developed, and I am definitely biased, is that I combined a lot of the things I like to do into one program, which makes my life easier. Let's start by looking at one-day performance. Volatility was up. Everything else was down, and they're all down in the 1.2 diamonds, 1.3 spiders, 1.5 Russell, and Q's leading the way again at minus 1.8. If you look at the last 5 days, you could see they're all down between 3.5 and a little bit over 4%. If you look at where they finished the session on Thursday, really not much. They're all in the bottom 20%, so not much of a rally at the end. Once again, if you look at the new high, new low, net new high, new lows, and you look at it at various time frames on the NYSE and the NASDAQ, they're negative. Down here, we could see across the S&P 1500, NASDAQ, and NYSE, only a few sectors were positive, only a few industry groups, 15%, 18%, 18% were positive, and 21% of the stocks in the S&P 1500, 25% in the NASDAQ, 27% in the NYSE were positive. So you have another day where overwhelmingly more stocks were down than were up. A tough day to make money, again, to the long side. This is a very difficult market to make money to the long side. If we look at what led, utilities were up, was the only positive in the S&P 500. You could see what led to the downside: discretionary, communications, real estate, and technology. Any themes that were working: gold, all-time highs; copper, silver, metals, then Norway, which seems like it probably would have metals; clean tech, Southeast Asia. Now you're going below the positive. So very few of these ETFs were positive on the session. So a very weak day in the U.S. markets. Now, my timing model, this is the monthly, and I put it up here just because the monthly had a sell on anything. This is May, November 23. This was November 23, November 23. For the first time in well over a year, we have enough of a pullback to trigger a monthly sell. And that's if the Russell closes below this line, which I could almost guarantee that it will. On the weeklies, it takes a second to do the calculations, but on the weekly, you're going to see that all of them remain in a sell signal. And you can see the red line at the bottom. And no one's close to their WMA, no one's close to flipping. And on the dailies, there's something else I wanted to point out. We have recreated on the dailies the 3-month new high, new low. Notice where it is. It is on the bottom, 0.91 on the spiders. The Qs are at 6.91, 0 on the diamonds, 1.21 on the Russell. That means the new high over new low ratio is almost 0, meaning there's no new highs. This is an area that you expect a reversal. Will it reverse on Monday? I feel like a broken on Friday rather. I don't know. I think that sentiment's going to spook the market. I think the best thing we could see, and I've said this before because this is how these things end: bad news, big sell-off, and then spends the rest of the day working its way positive, and that sets up for a higher open on Monday, and then we start thinking about the markets going higher. This open up a little bit and trade lower the whole day, just not a good pattern. If we look at the index ETFs, just to see what we got in the market on Thursday, you can see the spiders were down 1.33, and Qs were down 1.8. The diamonds were down here 1.25, and all of them set new lower lows. So after the attempted rally day, which would have been back here, and then we were looking starting on the 4th day for a follow-through day, which we did not get. I think that now that we've closed below the attempted rally day, we restart the clock, starting to look for a bottom if you're a canceler. Clearly, we have not had a follow-through day. Markets are lower. 17 is now crossed below the 50. We've broken down below the 200. And, Russell continues to lead to the downside from a longer-term perspective, was down 1.5. Now, you would have thought with another strong down day of the market, we'd have a VIX spike, and the VIX was up all of 1.85%. It looks like it's done spiking. So I've questioned whether that's enough of a spike compared to what we saw back here. It really is a lot smaller. It may be all we get, but right now it feels like we still need to have that washout day. And then if we look here at the dollar, let's blow that puppy up. Dollar's bouncing around on an intermediate term low. It was actually up a little bit, 0.35%. Now I mentioned on the commodities, gold all-time high, and you can see the GLD setting an all-time high and breaking out, up 1.17, bringing with it silver up 1.566. Oil, no, oil continues to bounce around in this area of consolidation. Natural gas, after a big run up, has pulled back some, and both the 10-year and the 30-year sold off on that weak PPI, down 0.74 on the 10-year. The 30-year are down 0.78. Those that have the program, if you look at it intraday, you'll see that now the three future ones, the VIX, the 10-year rate and the 30-year rate, are updating in near real-time fashion. Very exciting. If I look at my buckets, not as extreme as they could be. 18% of the stocks in NYSE are below the Bollinger Bands. 26% on the S&P 1500. 17 on the Russell 2000. 13 on the NASDAQ. That said, that 13-day says we're close, and doesn't mean we're going to bounce on Friday, because we've been looking for a bounce. But I want to see that bounce, and then I want to see a follow-through day for me to get excited to go more than just nibbling. And then on the market breadth tool, we could see more sell-offs in both the NYSE on the left and the NASDAQ. And what's to me is remarkable is we are really getting low on the percentage of the stocks above the 20, 50, and 200, certainly below the level of expectation for reversal. AD lines, new high, new lows, and up-down volume are all decisively negative on both sides of the chart. And we did get another bingo on the NASDAQ, which is a baby out with the bathwater day, something that you see as the market starts to get ready to put in a bottom. So, toppings of processing is a process. Bottoming can be an event, but I don't see that event having occurred yet. If I go back, well, if I look at ratio charts to see what might have been leading, they're all down except for one. But from a relative perspective, maybe we'll see something outperforming. These are, except for upper left, the rest of them are S&P sector charts versus the spider. So you could see defensive staples were turning back up, as was utilities. Real estate, not so much. Healthcare was. Energy continues to do better, as were materials. So the things that are really lagging are discretionary and technology, which hasn't changed. On the JAS layout, let's go into the top down first and take a look. As you can see, when I take my 3,400 stocks, assign them to industry groups and to sectors, all the sectors are down. The sector with the best performance was utilities. And if you want to buy utilities, go ahead. Not usually my cup of tea, but right now some of these will come with decent dividends. Don't know much about SUUN. AES, these are well down. FE, big sell-off. Otter, I think they were wind farms or something. NWS looks a little bit better. Isn't doing much here, but look at the relative strength. And if you look at something like this in the program, you can see it pays a 4.84% dividend. And you could go through, I'm not a big utility player, but this one's actually a nice pullback and breaking out here. This is EXC. So not much working here. Now I can turn this off and go over, look at industry groups, and let's just rank by 2-day momentum, the top 5, and see if anything comes to the top. That is interesting. I'll go to 6. And again, you could see things that are very small that I don't look at. What's any of these that I know? QMCO, no, not interested. QBTS, a quantum computer play. I haven't bought any of these, and I was happy when they sold off. I know these are hot. They're interesting. They're going to change the world. I just don't know if it's kind of like 3D printing, that everybody thought they were the best thing, and they had their run and never again. But if I was thinking of one, here it had a momentum and volume, had a breakout in the prior session, took out the 50, relative strength and OBV turning up. I really don't want to look at a lot of longs, folks, because I don't want you to think that because I'm looking at them, maybe you should be buying them. What about gold stocks? Let's just run through these real quickly. Franco Nevada breaking out to new highs. Let's see about the monthly. Probably is. Nope, not quite new highs. It's done this before. With gold at all-time highs, might be a decent time if you don't have gold in your portfolio. AEM is one that I've been playing on the larger side and breaking out as well. WPM, more of a silver play, breaking out to all-times high. Newmont Mining, still down in the pattern, which is kind of interesting. AU Ashanti, all right, Gold Ashanti trying to break out here out of a flag. That looks kind of good. And my small one that I've been playing is EGO, but it's sold off. All right, so that might be one approach I might have. If I look at the overall market, remember the JAS list is the NASDAQ plus the NYSE, filtered for a dollar and 100,000 that are eliminated every weekend. And that gives me a list of 3,400 stocks. And so I'm just going to do a quick scan. I'm going to look for my weekly bond go up, so longer term uptrend above the 200, greater than 500,000, greater than $5 with a 2-day momentum. Do I have any? No. That tells me something. Now let's take out the weekly bond go up. Do I have any? No. Let's take out the above the 200. No. Let's take off all the filters. So BAP, not bad. Uptrend, pulling back, breaking out here. Relative strength is good. Relative strength OBV down here. BAP might not have enough volume. I'm trying to figure out why it didn't. Yeah, it doesn't have 500,000 shares, but BAP doesn't look bad. Again, I am not advocating any longs here. 4.5%. I would be getting my shopping list ready. Bauman's too low in the thing, and KRMN because it looks like an IPO. So I think market matters. That's all I talked about today. I think it's still a be careful market. Right now futures are up. We got that sentiment. I expect a sell-off into the weekend, but maybe with these futures, I should start making a big list. So I'll make my shopping list. I'd still rather see a big sell-off at the open and close up a reversal day and then start to get ready. I don't see a follow-through day. I think we have to go back to square zero and get that attempted rally because we had lower lows. Have an awesome Friday, and then I'll see you over the weekend. Thanks, everybody, and thanks for watching my show. If you like it, click the like, subscribe, hit the alarm, and even better, join Top Down Trader.